What's going on, everyone? Happy Sunday. Hope you guys are all enjoying your weekend. Looks like we're finally starting to get some sun that's coming out, all around, right? Summertime is here. So is summer trading. So along with summertime comes summertime trading, where volume can tend to, dry up a little bit. You can tend to get a lot more consolidation intraday, and then you get like one move coming out of it, right? So what I want to go over here is the NASDAQ daily chart. And I want to talk about having a plan going in to start the week, right? So what we need to do, especially before we even take any trades on Monday, is kind of analyze our numbers from last week. What was the P&L, right? Did our strategy provide enough of an edge for us to be profitable? We're never going to win every single trade, but, did we get enough opportunities to kind of see that, we can be profitable and we can, build an edge in this current market conditions? For myself, along with a lot of the members and Evolution traders, we had a pretty decent week. We were able to finish green, so we're going to look to see if we can capitalize on that and make it a week 2. What I'm looking at here on the daily chart is this blow off top that we had at 20,371. That was on the 20th. So we're currently in a little bit of a 2-3 day back test consolidation, and we've kind of lost this short-term demand zone here, the 5-day moving average, as well as this linear regression top channel. If you kind of go back and look at your daily chart, look at the date of the 21st and look at where we've opened up trading to start today. If we do start to confirm the low price of 19,914, potentially we could be heading down to 19,775. Okay, now this would be the first successful back test of this rising 10-day moving average. The last time we really dealt with the 10-day moving average was going back to June the 5th. That's when we broke out. We kind of took out that most recent high, consolidated for 3 to 4 days, and then put in this run up. So I'd like to see this 10-day moving average get tested. Ultimately, if we kind of continue to sell off into tomorrow, I'd look for the pre-market. If we're already down here trading at this range, be careful chasing that early short, as it could be a trap. Okay, so it could be a trap setting up for that immediate washout as soon as the bell rings, and then we kind of just rise and reclaim it and kind of push back up towards the upside. Now, if we let's say pre-market happens, pre-market's rolling around and we've kind of tested this area, or we're close to testing this zone. Again, this is around a 150 point move. So if you wake up in the morning and you see the futures market down, 100 points, 120 points, be careful for taking that early short. What we would need to see have happen off the open is a strong bounce and rejection. And once you get that strong bounce and rejection, then you can look for the fade back down through. So that's typically how I play it. If we kind of hold this area, right, we're in the middle of a channel. If we kind of hold this middle channel here, definitely one of the levels that I'm looking for here is last week's highs, or Friday's highs, I should say, 20,086. Look for that area. That'd be reclaiming this 5-day moving average. That'd be extremely bullish. Look for those, scalps back up to the upside. Again, in this type of market environment, you have to think about it, right? So when I talk about having a plan and understanding what you want to do to start the week, you need to understand, what was your P&L last week? Were you green? Were you red? What's your account size? How much drawdown can you take this week? Also, how much loss can you take this week? We want to still protect last week's gains, right? So let's say, for example, you made $1,000, right? You don't want to go and lose 2,000 this week. The most we're going to probably want to lose is like half of that, right? If we have a bad week, $500, that still keeps us profitable, still kind of keep that equity curve nice and smooth and slowly rising. It's all about that equity curve, right? We can have red days, we can have a red week, but we need to keep that equity curve nice and smooth, right? We don't want to see any big sharp declines, right? So again, in this type of market environment, until we prove that we can, continue to push all-time highs, or, we come back down and we back test 18,000, I'm going to be in scalp mode. And when I go into scalp mode, I'm looking for very, dependable setups that I like to take and that have proven to me to work, but I'm looking for much smaller price targets, right? So for example, if I look at a 5-minute time frame, okay, and I go to kind of Friday's price action and I see, what's the ATR? ATR for Friday is, 12 to 15 points, which is not a lot, okay? Normally a strong market that's trending could be anywhere between 20 and 30 points on the NASDAQ. So right now we're trading at about half ATR, what is normal. So being that we're in that kind of range, I'm not going to really be looking for scalps that are going to pay me 15 points in one up move or one down move. I'm going to kind of take that ATR and I'm going to kind of go in half, right? I'm going to look for like anywhere between 5 and 8 points on my scalps. And if I can get that and I can be lucky enough to be on the right side of, maybe 2-3 trades, great. That's it. That's done. I'm going to lock it up. I'm going to just live to trade another day. So when you go in there and you have a plan, make sure that you're living to trade another day, okay? We don't have to pass the prop firm evaluation tomorrow. We don't have to try to hit $10,000 this week. All we need to do is stay in business, okay? That should be your main focus. Stay in business. Stay patient. Allow your setup to present itself. Make sure you have confidence to execute when your setup is presenting itself. And typically, if you go down, 1, 2, 3 losses and you're managing your risk, is it going to sting a little bit? Sure. Is it going to, take you out of business? No. But if you take 2 to 3 losses, especially back to back to back, call it quits, okay? Either trade another account or come back tomorrow altogether, which is going to be Tuesday. And this goes the same thing for the win rate, right? Let's say, you take a, quick little scalp in pre-market, and in the first 20 minutes you take another trade and both of those trades hit for winning profits. Who says that you have to sit there the next 5 hours and look for 20 different setups, right? Why not protect what's in your pocket already? Because the only thing that we can do ever is protect what's guaranteed. And the only thing that is guaranteed is the number that's flashing on your screen when it's flashing on your screen. It doesn't have to remain that same number. It could change on a second-by-second basis, on a tick-by-tick basis. It could change on a trade-by-trade basis. A lot of times traders, they start to feel like they're in the zone and they scalped, 2, 3, 4 winning trades, and man, this seems so easy. I could just do this all day long. And then they take that one losing trade and give everything back. That's not what you want to do. That's not smart trading. Again, if you want to do something like that, go put $200-300 in a slot machine and sit there and push the button over and over and over and over and over and over and over, right? This is trading. This is not gambling. Again, we do have strategy. We have edge. So that's giving us just a little sliver, okay, of advantage. Does it mean that it's guaranteed? Of course not, right? No strategy is guaranteed. No day is guaranteed. So make sure you're protecting yourselves and you're doing what's right. Trade like an adult, okay? Treat this as a real business. This is not, some fly-by-night thing where you can come in here and, make a bunch of money in 30 days and then go retire. Have a goal and a plan of staying in business, over the next year, over the next 3 years, over the next 5 years. Have a 10-year horizon. What does your trading career look like over the next 5 to 10 years? What does your trading career look like over the next 20 years? What does your trading career look like over the next 6 months, right? If you can do what in the next 6 months would prove to you that you can do this over the next 6 years, right? For me, years and years ago, it was, if I can just follow my rules and not have mental breakdowns, that was huge, right? I didn't care if I made, $15 or I made, $1,500. What I wanted to do and what I wanted to teach myself that I could do is being able to shut it down when I'm green or red, walk away, come back to trade another day. And what I wanted to do was, can I follow the same strategy long enough to see if it's going to be beneficial to me? And a lot of times traders, they get in this pattern where maybe a strategy works for, 1, 2, 3 trades or, 2 or 3 weeks. And then the moment it doesn't pay out, or the moment they have a red day, or God forbid, the moment we have a flat week or a red week, it doesn't work, and it's got to be something. Your strategy is always going to work. It's just maybe the parameters change, right? So, normally in, let's say, a bull market, if your strategy's, hitting for 15 to 25 points, well, then maybe in some type of distribution cycle or a bear market or a bear cycle or a sell cycle, maybe, it's better to take 15 points. Maybe in, you know, a period of consolidation, you know, you're not going to get those 15 to 25 points, but maybe you can get 5 to 10, right? Maybe there's something we can adjust with our stop loss when volume dries up a little bit. We don't have to change the strategy model. We just need to change the parameters for the stop losses and take profits. And again, that's going to be dependent on you as a trader and on your personal account size, right? Everyone's different. What stop loss might work for me might be horrible for you, right? You know, some people I know that sit out there and they look for all day moves and continuation patterns where they're looking for 40, 50, 60 points, 70 points on the NASDAQ. Maybe that doesn't fit your strategy, right? You know, maybe you're not the type of trader who can sit there and, you know, handle only a 30%, 40% win rate because it's going to destroy your confidence. But maybe you do much better if your strategy hit at like 65 or 75% of the time, but you made half the amount of money or you know, even a quarter the amount of money as is someone who has a higher, you know, they're taking more reward, right? So again, once you figure out your trader profile, your trader DNA, what works for you, then you need to stick to that. But you have to stick to that for enough time to see it through. And typically for me, any new strategy, any new stop loss or take profit, it's tested a bare minimum, guys. And this is bare minimum, you know, not including how many back testing trades I've done. You know, in order for me to even start working a model, I need to at least back test, right, where I'm going through the chart physically and go back 100, 200, 300 trades. Bare minimum, right, before I can even start implementing that. And then when I do implement that, I want to see a minimum of at least 20 trades, right? So I need to run the same model for 20 trades before I can even have any type of data to go off of to see if there's something I need to adjust. And typically for me, you know, at around 100 trades, I will know if this strategy is profitable or not, and by how much, right? Again, it doesn't have to be much, right? Like, I'm not saying that after 100 trades, I need to make $100,000 or $10,000. If I can run 100 trades and make $500, then I can run that model on one particular account 1,000 times and make $5,000. Great. And I can do it on another account, just scale up, you know, scale up my contract sizes, and you get what I'm saying. So again, your edge doesn't need to be profitable by thousands and thousands of dollars a day. It just needs to be profitable, okay? Like, I don't care if someone's making $200 all month with their edge. That's still an edge. All you need to do from there is scale that edge, whether it be adding another contract to that existing edge to take the $200 to $400, or whether that be adding another account if you're trading prop firms and take that $200 to $400 and, you know, go 3 accounts and go to $600. All you need to do is scale. So all we need to do is make sure that our edge is profitable. And after 100 trades, typically, you know, what are we profitable, right? Is it 20 bucks? Is it 2,000 bucks, right? I don't know, because I'm not trading. I'm not you guys, and I'm not trading your strategy and your edge. So just make sure you always have a plan. Make sure to like, comment, subscribe on this video. I would really highly appreciate it if you did hit that like button. And again, I'll see all of you guys on the trading floor tomorrow that are in Evolution Traders. And for the rest of you guys, I'll catch you guys on the next YouTube video.